Good afternoon. Let's do some business here. We do it live and do more at 4 every weekday afternoons here, right here at 790 KBC. Streaming live online worldwide at 790 KBC as well. It's abckbc.com as well as Apple iTunes and all your favorite podcast platforms. Be sure to listen to the Mottek On Money podcast. Well, what a week. We are getting it together here. Stocks closing sharply higher today. In fact, we've had a pretty good week. In fact, the best week, pretty much of the year, coming off the worst week of the year last week. The S&P 500 and NASDAQ each posting the biggest weekly jump since last November, believe it or not, ahead of the Fed's big policy meeting coming up next week. The Dow coming in for a closing gain of nearly 300 points. The S&P 500 moved up 30, and the NASDAQ moving up 114 points. The so-called volatility index, the Wall Street Fear Index, moving sharply lower ahead of the Fed's highly anticipated upcoming decision on where to set interest rates. It looks like that VIX index, as it's known, plunged more than 26% this week. The price of oil also coming under pressure this past week with a loss for the session, but an overall gain for the week. It was a nervous week in the oil markets as traders took in the storm disruptions in the Gulf of Mexico as a hurricane moved through the Gulf of Mexico. We did see the price of oil today pulling back 32 cents to settle at 68.65 a barrel. Meanwhile, the price of gold has hit a record high today. Interestingly, just as we were told, inflation is easing. The Fed, of course, expected now to lower interest rates, and that's expected to put downward pressure on the U.S. dollar. So we'll be watching for that as well, with the price of gold up at $25.60 today to $3,606.20 an ounce. Warner Brothers Discovery shares are leading the S&P 500 for the second day in a row as enthusiasm builds for the company's renewed deal with Charter Communications and what it means for the Warner Brothers Discovery streaming business. A lot to take in this week with new readings on the economy, jobs, inflation, politics, geopolitics, all ahead of another big week with the Fed expected to
cut interest rates next week, impacting business and consumer loans. I'll be bringing it home today with business leader Mark Wilbur, current chairman of Employers Group, former chair and founding member of the LA BizFin, former associate dean of the USC Marshall School of Business. Homelessness and squatting have become big issues here in the Los Angeles area, as well as elsewhere around the country. I'll discuss that and more with Mary Brook, who's author of the Daily Callers column featuring her takes on modern-day insanities. But first, on your money, the markets, and the economy. Joining us live now, the one and only Matt Krantz at Investors Business Daily. Matt, thank you very much for stepping up to the plate to wrap up this big week here.
Thanks for having me.
Terrific to have you with us again. Of course, you do a really terrific job there at IBD, an authoritative publication, watching the markets on a daily basis. Give us your reaction to this market move on the upside this week following last week's washout.
No, it's great. I think everyone's anticipating a Fed cut next week. We don't know how big it's going to be. Some people are talking 50 basis points or 0.5%, which would be pretty astounding. Keep in mind, rates have been high for a while now, though. But the mortgage market's already starting to react. And if you've got a high interest rate mortgage that you got late last year, now is probably a good time to start thinking about a refinance.
All right. What do you think the Fed is going to be doing next week here? Will it be a quarter-point cut or a half-point cut?
We watch that pretty closely, and we look at the options market, and it gives us a good indication about that. And I think right now it's 50-50. So that in itself is pretty interesting, though, because everyone thought it was going to be 25 basis points until very recently when we started getting some inflation data. Now it's 50% cut, very likely. So, it's really hard to guess, but both are probably going to be positive for the market.
On there live with Matt Krantz from Investors Business Daily. Well, now that we found the fuse box and we've restored our connection here, we're doing it live here, Mottek On Money on 790 KABC. We're on there live with Matt Krantz from Investors Business Daily. So the expectation here, it's kind of 50-50, whether we'll see a quarter-point cut or a half-point cut for the Fed next week. Take in the latest news on the economy, inflation, and jobs here. That's all what the Fed will be taking a look at next week, along with a lot of geopolitical headwinds. What do you expect to hear from the Fed chairman next week?
I think everyone's going to kind of ignore everything except how big the point cut is. I think everyone's going to wait for that to be the bottom line. the boilerplate language will always be out there, inflation, blah, blah, blah. But I think where the rubber hits the road is at 25 versus 50, and I think it could go either way at this point.
All right. In the meantime, we've seen the Magnificent Seven get a mixed reception on Wall Street lately, but let me take a look at the so-called Magnificent One, NVIDIA, which of course led the AI rally, pulling back slightly today, despite the overall uptick in the markets. NVIDIA down 4 cents here today at 119.10. What are your current thoughts on what's happening with NVIDIA and the rest of those Magnificent Seven names?
Yeah, it's pretty astounding. NVIDIA is in such a good position. The stock is up. It almost looks like a typo, 141% this year. That is just astounding. They've got what everybody wants, which is kind of a foothold in the AI business. Everybody wants their stuff. They've been developing this software and hardware for decades. They have such a head start that even if anyone tries to copy them, they're going to have a hard time catching up. And their software, CUDA, is designed in such a way that it's really hard to switch. So it's kind of a dreamy business, to be honest with you. And they're really enjoying their runway. They have a new set of chips coming out soon, and that should be great. But let it be known, they're definitely the outlier amongst the Magnificent Seven. They're pulling way ahead of the rest of the six.
All right, and all of a sudden, here's a name we haven't heard in quite some time, but IBM suddenly hitting at record highs. Big Blue itself making a play for AI fame as well. Remember, it was one of the leaders early on, not only in computing, but also in AI. IBM shares hitting a record high. What are your thoughts about Big Blue here?
Yeah, we've been talking about Big Blue for a while. I'm glad you bring him up. It was kind of a sleeper story. They were too early with AI. They had this thing called Watson that made a big fuss. Unfortunately, it wasn't easy for everyone to use like ChatGPT is, so it didn't catch on like it did. But it did have some commercial applications. They're making another run at it. The stock's up 31% this year. I think another thing that people really like about IBM is it's so undiscovered. The valuation's low. In fact, I don't think a lot of people realize this, but it actually yields 3.2%, which is pretty amazing for a tech stock. So it's a great sleeper hit, and it's getting discovered for sure.
All right. And anything else that's getting your attention in the tech space? Of course, we're all watching what's happening in space these days with SpaceX's successful spacewalk and all that's going on. And perhaps Tesla getting a boost on all that big news.
Yeah, that's another good call out. Pity Boeing. I mean, what a disaster. Here we are in the middle of a massive bull market run. We're only about 1% away from an all-time high in the S&P. This stock's down 40% this year. Keep in mind, they basically have an oligopoly. They only have to compete with really one competitor in Europe. And then they have the embarrassment of having like astronauts. They don't want me to say it, but they're stranded up there, and they're going to rely on Elon Musk to get them back. It's just unbelievable. And Tesla has not been benefiting so far, but the stock's down this year. It's down about 17% over the last 52 weeks. But you just can't imagine that once they have the robo-taxi announcement here in town in the next couple of weeks, that can't light up a little bit of excitement for Tesla again.
All right, and we're also watching some pretty big moves in the crypto world this week with a washout and then a rebound. It's fun when it goes up, and we see Bitcoin back above 60,000 here at last check, almost at 61 again. We talked to the biggest fans of crypto here, as well as the harshest critics, and I know you also keep an eye on crypto. What do you make of the crypto moves this week?
I'm not sure what to make of it. I thought that it would rally with gold because people are afraid of the dollar weakening, so they move into gold. That makes total sense, right? But then you would think that they'd also move into Bitcoin. That has not really been the case. It was up, as you said today. The ProCheers Bitcoin Strategy ETF, the BITO, was up about 2%, but it's down for the year. It's down about 12%. Keep in mind that it's really confounding because gold is actually up 25% and is beating the S&P 500. So I've always thought that those two assets should trade together, but they don't, and I don't really understand why that is.
What about gold? We've just talked about digital gold and now good old analog gold. Gold also hitting record highs. Analog gold, that is, more than $25 at $2,606.20 an ounce. Silver also along for the ride, by the way, moving above $31 an ounce, still well below its all-time high. But what about this move in the precious metals this week?
Gold is having it's really kind of a perfect situation for gold. So you've got the Fed about to make some moves, which will most likely weaken the dollar. You've got a political election, which is supremely divisive, and so if you look at the cover of the Economist this week, they think that no matter who wins, everyone's going to complain about it. So you've got that, you've got geopolitical, you've got major conflicts and wars going on around the world. It's kind of a perfect situation for gold, and that's why investors are really jumping into these ETFs. There's a bunch of these ETFs that track gold, and they've all been seeing huge inflows of dollars, and you can totally understand why. Makes total sense.
Then the expectation, right, is that the dollar will be weakening next week once the Fed lowers rates and making the dollar less attractive to investors. And already we've seen the dollar move to just about 111 versus the euro, so that French onion soup's going to be a little bit more expensive for anybody heading over there. The British pound now at 131 versus the dollar, and the yen is at 140. The yen back in focus as well. That's what the movements in the yen certainly have also been making big news in the last month or so. What do you think is going to happen to the dollar next week once the Fed makes its decision?
Yeah, I just got back from Japan, incidentally. I just couldn't resist with the dollar so strong, and I was not alone. You should have seen the Americans just going over there and just walking out of every shop with all kinds of bags, and you want an extra dessert at the restaurant? Sure, get two. I mean, it's pretty crazy, but it's definitely out of whack. The central bank in Japan's been trying to kind of equalize it. They haven't had much luck, but they are having luck over there, solidifying their corporate governance and kind of bringing up the valuations on their stock. And I think eventually this is all going to be bullish for the yen. But in the meantime, you might as well go to LAX and book your flight to Tokyo, because it's like that whole country's on sale for Americans.
Next time you go, let me know. We need some more Hello Kitty stuff for my daughters. So next time you go, let me know about that. But tell us about what you found there. Not everybody. It's terrific that you went to Tokyo. Was it? Tell us about your experience there.
Yeah. So it was really crazy, because you could tell there were just Americans everywhere, and it was almost like a giant shopping mall. And all the Americans with their, it's really hard to explain how powerful the dollar is when you go there. There was a pair of shoes my daughter's been eyeing here in LA, looking at eBay and whatnot. We walk over there and get the shoe for like 40% off. And I think that was it's just too irresistible for Americans. And that was kind of what I was seeing. It's like a shopping spree, a doorbuster.
Isn't that something? And of course, it was the that carry trade and the move in the yen that spooked the market a little over a month ago, right? We saw that washout of the Dow plunging 1,000 points. So what's going on with Japan, since you were just there and followed this aspect of the markets very, very closely? Speaking of shoes, is there another shoe to drop here as it relates to all that?
Yeah, I mean, everyone is terrified of the carry trade. So basically what that is you can go to Japan and borrow their money for basically nothing, and then transfer the money into another asset like a dollar, and then purchase stocks using your yen converted dollars. It works great unless the rates on the yen rise, which they've been trying to push them higher. And there's great fear that this is a huge trade that, if it had to unwind quickly, could get ugly. Personally, I don't think that's going to be the case, but we won't know until we find out. But the market did recover during that scare, and I think that a lot of these banks had some kind of internal looking at what's going on within their compliance, and I personally don't see a major issue, but it's definitely something to keep an eye on.
All right, turning to politics here, which has also been impacting the markets this week. I see shares of DJT, Donald J. Trump stock, soaring today as the former president says he will not sell when lockup period ends. is the Trump trade back on, or is the Harris trade on? What's your view of that big discussion this week?
Well, that's a really funny thing because I was watching the debate like everyone else, and I was taken by how Trump was saying that America is basically a failed nation. And I think he might be talking his book. I don't want to get political. I'm an independent. But what I would say is for him, it maybe feels like a failed nation because his stock, Donald J. Trump, which is Trump Media and Technology Group, is down 75% just from the conversion back in, I think it was in March. So that is brutal. And kind of an unfortunate twist to that is investors in that firm, if you can call it, hasn't made a dime in its entire existence, have lost $9 billion. Trump's taken most of the losses, but even Vanguard owns shares and iShares own shares. So it's to me, it's funny enough, while the shares of Donald Trump stock have been falling 75%, the S&P 500 is up like 8 or 9%. So I don't think that the nation's failed. I think that his stock has failed. He said today, supposedly, reportedly, that he won't sell the shares. There's a lockup expiring. I think it's next week, and he says he won't sell. But you got to remember, this is the same guy who ran a Trump hotels and casino resorts that cost public investors every single penny. And it was actually then the federal government pressed charges and won for them misstating earnings in the pro forma type of way. So that's kind of where I'm at with that one. I definitely would not touch that stock with a 10-foot pole.
All right, it was up 12% today, and we'll continue to follow it. In the meantime, consumer confidence surprisingly has hit a 4-month high, according to the latest reading, as inflation eased, and of course. One thing that is most notable, gas prices have eased as the price of oil has come down, and usually as gas prices come down, consumer confidence goes up. But overall, Americans are still pessimistic. How would you take in the latest reading on consumer confidence we got today?
Yeah, there's a meme going around in this quote, in this economy. You've got like people in line at Starbucks for their $7 drink talking about how bad the economy is. I think there's a lot of that going on. These readings we're getting on the economy, we're hearing how terrible the economy is. Well, the stock market, which is a forward-looking indicator, it runs about 6 months in advance in a predictive way. Like we talked about earlier, is at almost an all-time high. So I'm kind of confused on how bad things could really be. Unemployment's low. Inflation is plummeting. The dollar is strong. And like I said, Americans are going on a global shopping spree. So I get kind of confused when I hear people talking about this economy.
Americans led by Matt Krantz going on a global shopping spree, it sounds like. So good on you there, Matt. And so let me ask you the big question here that we ask on this program. Any particular places where your market monitors are putting money now and or taking it off the table? I noticed that utility stocks, by the way, had a big week this week.
Yeah, I'm actually glad you brought that up. It's actually amazing. The Utilities Select Sector Spider Fund, which tracks the industry, is up 24% year to date. If it sounds amazing, it is. It's over 2 times what the S&P usually does in a full year. And the year's not even over yet. It also makes it the number 1 performing sector of all 10 in the S&P 500, utilities. So keep in mind, in addition to the 24% return, you get a yield of almost 3% on top of that. What's that all about? That's all AI. There's so much computing demand needed to generate these models that we're all enjoying and entertaining ourselves with that it takes an enormous amount of power to fuel those NVIDIA chips. And the utilities can't build capacity fast enough. So what happens when you have a shortage of capacity? You have greater pricing, and that's helping with the stocks.
All right, Matt. Well, thanks very much for taking the call this afternoon. A big week and another big week ahead. Always look forward to our conversations here. That is Matt Krantz at Investors Business Daily. Thank you very much, Matt, LA-based Investors Business Daily guy, by the way. Thank you very much for joining us live here this afternoon.
Thank you.
And right out to the freeways now, 790 KABC. Mottek On Money continues here in 790 KABC. Friday the 13th turned out to be a lucky day on Wall Street with the Dow up nearly 300 points at the closing bell at 41,394. The S&P 500 of 30 at 5,626. And the NASDAQ of 114 to 17,684. The yield in the 10-year note at 3.66%. We see Boeing shares taking a hit today, down nearly 4% after the aerospace giant's machinists union rejected a tentative deal and voted to go on strike. The price of gold hitting a record high today, up $25.60 at $2,606.20 an ounce, and silver rallied today as well, moving above $31 an ounce. Crude oil futures 27 cents higher to $69.24 a barrel. Oil cracked below $70 a barrel this week, despite the upheaval in the Middle East, as well as a hurricane in the Gulf of Mexico. Checking the cryptos now, we see Bitcoin up about 900 at 60,631, Ethereum up about 40 at 2,451, and Doge at 11 cents. And now the latest news here in 790 KABC. Mottek On Money continues here in 790 KABC. Turned out to be a banner week for the stock market, coming off the worst week of the year. We have the best week of the year. How about that? The NASDAQ up more than 5% for the week, posting its best week of the year. The S&P 500 increased 4% for the week, and the Dow gained 2% for the week. All this after the market had been rattled by volatility, but we've seen some impressive rebounds lately. And looks like the Dow today tacked down another 300 to end the week at 41,394. The S&P 500 of 30. The NASDAQ gained 114 to close out the week. A lot to take in with the new readings on inflation this week, on the economy, jobs recently, geopolitics, politics, of course, ahead of another big week coming up here with the Federal Reserve expected to cut interest rates, impacting business and consumer loans. We also got a new reading on consumer confidence today, showing an uptick this month as gas prices have come down. Meanwhile, bearish sentiment among individual investors about the short-term outlook for stocks increased, according to a new investment survey. Let's bring it home now here in Los Angeles with business leader Mark Wilbur, current chairman of Employers Group, former chair and founding member of the LA BizFed, and former associate dean of the USC Marshall School of Business. Mark Wilbur, thank you very much for coming to the line this afternoon.
Hey, Frank, thank you so much for having me on. It's great to be back.
Likewise, thank you very much. And among the movers and shakers you talked to, Mark, here in Los Angeles, what's the real mood out there at the moment?
Well, there's a lot of caution right now. I mean, literally, it's one of those moments, like if you were at an athletic event, everybody's sitting on the edge of their seat, waiting to see what the Fed is going to do next Wednesday. So everybody's kind of waiting. Everybody's kind of anxious about it. Your prior caller from Investors Business Daily was talking about the, is it going to be a quarter? Is it going to be a 0.5%? Gosh, it'd be amazing if it was a 0.5% because, boy, certainly a lot of people could use that that are dealing with tough credit cards, APRs on mortgages. I mean, all those kinds of things that are really negatively impacted people for quite a while now and stripped out a lot of buying power and things like that. They would really appreciate that.
Certainly. So a lot riding on the Fed's decision next week, whether it's going to be a quarter or a half percentage point remains to be seen. In the meantime, we're watching what's happening on Main Street as well as on Wall Street. Wall Street seems to be cheering expectations that we might see a better than expected cut next week in the face of the latest inflation reading, right? So what about the inflation numbers we got this week, and for that matter, the jobs report we got recently, how it might translate here in Los Angeles? Of course, it's jobs and inflation that the Fed will be considering when they meet next week.
I went to Bankrate and looked at the current inflation rate, which is hovering at about 2.5%, right? Which is a dramatic improvement over, the last several years. But, the problem is, Frank, it's like all things, right? Okay, so 2.5% inflation rate, interest rate may be coming down, but the prices are still 21.2% more expensive than they were at the mid-pandemic. So, the prices are still very high. They're going to be very resistant to coming down. A lot of manufacturers, a lot of resources that go into production and things like that. Those things are not going to change immediately. So and definitely not by the election. While the interest rate will be welcome, the inflation, it won't ease on people. From a price standpoint, yes, the inflation rate might change, but the prices are always a little resistant to come down in that process.
Right. So the rate of increase of inflation's come down, but certainly the inflation damage has been done, as you accurately note, given what we've seen in recent years. Former President Trump speaking today here in Southern California, Ranchos Palos Verdes, at his golf course there, and talking about California and blasting what's been going on here as far as crime and homelessness and the economy too, for that matter. What's your reaction to what's happening on the crime and homelessness front and the business environment that we see out there on the streets?
Yeah, it was nice to see the former president make a visit to California. He doesn't come to California a lot, even though he has some significant investments, and certainly Rancho Palos Verdes is one of them, with Trump National out there right on the coast. It's interesting, Frank. I have a lot of experience out in the Palos Verdes area, and that area. I think John Cruikshank spoke out there too, because it's the rock is moving, as they say out there, and the Portuguese Bend area is a real problem out there, and it needs like real help. They constantly fix that road. I mean like weekly, because it's always on the move, and it has been for years. So it's not new news in that area, but they really need some better fixes than what they have. All that being said, he commented a lot about what he would like to see at California. I think he did aptly sum up things that California's a mess. We've got 4 years of people and businesses running from the state of California because it's the highest tax state across the board. When you add up everything across the board, the amount of taxes that our people deal with here are staggering compared to other states. I mean, when you do the math, it doesn't take a lot of math to figure out that you can do it cheaper elsewhere if you're fortunate enough that you can be mobile and move. But talked about lowering taxes, talked about increasing the water supply. The reclamation of water in our state has always been an issue, and I think I know that Metropolitan Water has a lot of plans in that area and are working hard in that area, because when it rains, Frank, in the past, it just washes out into the ocean. We just lose all that fresh water straight out to the ocean when we should be capturing it like most nations do. So that's a big deal. And then to make it more business friendly, I think that's a big thing. But the last thing he talked about was, talking about improving safety. And I think we all could be happy with that. They just, the governor I know just signed the smash and grab legislation to increase the incarceration rates. What do they call it? The enhancements for those crimes. And it's nice to see that come up too, because these smash and grabs, these very organized, methodical attacks on retailers are a big deal.
On the Air Live with Mark Wilbur, the current chairman of Employers Group and business leader here in Southern California. And certainly, while we have the chance, we got to send kudos out to SpaceX for their tremendous achievements this week under Elon Musk and Jerry Shotwell, right? Not hearing enough about those tremendous accomplishments we've seen this week with a company still, for the moment anyway, based here in Southern California. Yeah,
Elon is, very clear. He wants freedom of speech. He wants people to be able to tell the truth about things and not be, censored and come after. I mean, it's stunning to think about this. They hold over 50% of the market share in EVs globally. I mean, they are the dominant player. It's not even a close call. And it's stunning, when there was the big EV meeting at the White House, he wasn't even invited. And now SpaceX launches this thing. We had the first citizen space watch at the highest level. The suits are amazing. All the stuff that he does is, it's kind of jaw-dropping, to be quite frank. And no recognition at all. None. Absolutely none. And it's just, it kind of blows my mind. Here's somebody we should be celebrating, and we don't.
Well, congratulations, SpaceX, for a huge week, and the team that he's assembled there here in Hawthorne, right here in Southern California, is truly amazing. Yeah. Mark, thank you very much for wrapping up a big week, and we look forward to next week, and we'll be watching with you. Mark Wilbur, current chairman of Employers Group, former chair, founding member of the LA BizFed, and former associate dean of the USC Marshall School of Business. Mark, thank you very much for joining us live here this afternoon.
You bet. Thanks so much, Frank. It's a true pleasure.
Thank you very much. And right after the freeways now on 790 KABC. Mottek On Money continues here, 790 KABC. Good afternoon. What a week. A lot to talk about here. Homelessness and squatting, also big issues here in Los Angeles as well as elsewhere around the country now, as we've had some high-profile examples of that lately here in the Los Angeles area. Watching that, along with everything else crazy going on out there, is Mary Rook, author of the Daily Caller's column featuring her takes on modern-day insanities. Mary Rook, thank you very much for coming to the line this afternoon.
Absolutely. Thank you so much for having me on.
What a week. Give us your thoughts about what just happened this week.
I think that the debate has kind of woken up Trump. I think that you saw him go out to California and several other campaign spots. He seems to feel very confident about, what's happened. And I think that despite the mainstream narrative that Vice President Kamala Harris has, won the debate hands down, she seems to be a bit on the back foot. She was begging for a second debate where Trump is saying he's not going to give her one. So I think it's been really interesting politically. As far as the squatter documentary that the Daily Caller's put out, I think that it couldn't have been more timing as we're talking about, people not being able to afford homes. And whenever you finally do, what does that mean for you? The Daily Caller just put out this new documentary, The American Squatter, and it really goes over a lot of the crazy scenarios. I know that there have been, like you said, some pretty high-profile cases out there in Los Angeles, but some of the ones in, a more middle-class neighborhood, say New York and all of Chicago, were highlighted in the film. And it goes through what these owners had to get through to be able to get their homes back. And this one poor woman is still fighting. And so I think it was, really beautifully done and really interesting point of view to talk about.
Certainly, and a lot of people potentially could be impacted by all this. Any big takeaways, certainly with what's happened here lately, and of course with LA being the epicenter of the homeless crisis, we're still at or near record highs as far as the numbers are concerned, about 75,000. So we are. The homeless population here in Los Angeles is higher than the population of most cities in the United States at this point. The population, by comparison, of Beverly Hills is 35,000. So the homeless population within this metro area is absolutely stunning. And now we have this issue of people breaking in the homes and taking them over. Any other big takeaways? And congratulations to the team there at the Daily Caller for that excellent documentary.
Thank you so much. I think the most interesting thing that we've uncovered in this documentary is the fact that they're not doing this organically, in the sense that they don't just see a home that's vacant and decide to break in. We've had adverse possession laws or squatter laws in the United States going back centuries. Is essentially how we were able to tackle conquering the West and moving out from the East Coast. And so that's not, abnormal in our lives. However, what's going on now is completely different. We're having homeless populations who are using, technology through social media apps, and they're getting together and they're telling each other, what are your laws in your area? How do you figure out if the house is vacant? How do you figure out going around the laws? What do you need to be able to stay in the house for a certain amount of time, whether that's 3 months, 6 months, a year, while the homeowner is fighting to get it back? And, it's a concerted effort to be able to take away home owning rights. And I think that this starts at your local and state government. Each state is different as far as what they allow for squatters' rights, but it really goes back to, is owning a home really owning a home anymore? And I think that in some states, especially like California and New York, I think the answer is no. I mean, at any point in time, you could have your home taken away from you through no fault of your own. One of the things that we found in this documentary is that people were doing schemes like putting a cone in the driveway, seeing if you were out of town. If the cone hadn't moved in a couple days, by the time you got back, they had moved their stuff in. Checking the mail, seeing if you're picking it up, going around at nighttime and during the daytime to figure out what points of time of the day are you working. And all they have to do to be considered not breaking in but squatting is to move their own personal belongings in or show some sort of paperwork. And in one case, it was an Uber Eats receipt that they, supposedly lived in the home. The issue being is that if you call the cops and the cops come and you say, this is my house, these people broke in and they're here, if if those people produce any type of documentation that, essentially semi-proves that they live there, then the cops will consider this a civil matter and you have to go through the courts, which takes months. And, it really strips away the rights of the homeowner. And I think that is, probably the most shocking thing I learned while doing the documentary for the Daily Caller. Let me just say it's really beautifully done. I think the work for our editing team should be noticed here because, every documentary they do just gets better and better. And this one is just proof of that.
Excellent. Congratulations, and appreciate you highlighting all of this. What's the best way for people to be able to see this excellent documentary?
Well, of course, you can go to thedailycaller.com and you sign up for our Patriot subscribers. Then that gives you access to all of our documentaries. However, for American Squatter, we also have a specific website for it. You can go to Sorry, give me 1 second. I'm just pulling it up. You can go to americansquatter.dailycaller.com, and that'll give you an option to be able to sign up. And once you become a Patriots member, you get access to all of our documentaries, all of our analysis for the 2024 election and beyond.
Terrific, Mary. Well, thank you very much for sharing that. Mary Rook, author of the Daily Caller's column, and also on that great documentary on the American Squatter. Stay tuned now for the 790 KBC News Blitz with Randy Wang. This is Mottek On Money on 790 KBC.
The Bigger Pockets portfolio of podcasts are worthy of your investment.
What is the path of least resistance with highest ROI?
New episodes available every day.
People oftentimes are paying very close attention to what the Fed does to get signals on what's going to happen with mortgage rates, and it's completely wrong way thinking.
Whether it's real estate, on the market, rookie, or money.
And you could make just 6% on a deal. You can retire next month.
The Bigger Pockets podcasts are on YouTube or wherever you listen.